They say that 90% of traders fail. But have you ever stopped to ask yourself why? Most people think it's because they picked the wrong strategy, or they didn't understand the charts, or they didn't study enough technical analysis. But the truth is much deeper, because the biggest enemy in trading is not the market. It's your emotions. Welcome to Trade with Xeps, where we focus on the psychology behind trading success. Kindly like, subscribe, and share. Let's begin. Most traders believe they lose money because of bad analysis, but that's rarely the real reason. The moment you put real money at risk, trading stops being logical and starts becoming psychological. Fear takes over. Greed takes over. Frustration takes over. Ego takes over. You exit early when you should hold. You hold when you should exit. You jump in too fast. Or you double down when you absolutely shouldn't. It's not the market defeating you. It's your emotions controlling you. You don't need a better strategy. You need a better mindset. Kindly like, subscribe, and share if you haven't. Now, let's look at the 3 hidden emotional traps. 1. FOMO, the fear of missing out. You see the market making a big move. You feel that pressure in your chest, that voice saying, if I don't jump in now, I'll miss it. So you enter late. You chase the move. And almost instantly, the market reverses. Professionals wait for the right trade. Amateurs chase every trade. 2. The revenge trade. You take a loss. It hurts. It feels unfair. So you enter another trade immediately. Not because it's in your plan, but because you want to win back what you just lost. That's not trading. That's emotional gambling. 3. The ego trap. You don't want to be wrong. So you hold on to losing trades, hoping they'll turn around. You tell yourself, the market is wrong, not me. But the market doesn't care about your opinion. It only reacts to your decisions. Ego plus leverage equals disaster. How to overcome emotional trading. The best traders aren't emotionless. They've simply learned how to manage their emotions. Here are 3 powerful habits that help. 1. Trade with a plan. Before every session, write down exactly what you're looking for, when you'll enter, and when you'll exit. If it isn't written down, it doesn't exist. 2. Journal every trade. Don't just write numbers. Write how you felt. Were you anxious, rushing, confident, reckless? Your journal becomes the mirror that reveals your emotional patterns. 3. Accept uncertainty. You can't predict the market. You can only prepare for it. When you accept that losing is a normal part of trading, fear loses its power over you. You begin to think in probabilities, not emotions. That's when trading becomes a business, not a battle. Conclusion: 90% of traders fail because they trade their emotions and ignore their plan. But the 10% who succeed, they master themselves before they master the markets. Discipline over excitement. Consistency over perfection. Mindset over everything. If this video helped you, hit the like button. It tells YouTube to show it to more traders. Subscribe for weekly psychology videos. And remember, the market will always test your emotions, but how you respond determines your success.